Well, there you have it, ladies and gentlemen. After a week of trading, this is what the candle on the NASDAQ looks like. And if you talk about indecision, this is what indecision looks like to me. We ran all-time highs, got all the way up to 18.7 almost, and dipped back down to the previous week's close. So right now we're sitting right in that 18.3 range, nice and comfortably. We explored price up here, rejected, came back down. Some pretty serious action when we look at the daily candles, but the weekly candle definitely tells us where we're at, which is a point of indecision. We're not sure what's next. All right, this is 2023 to 2024 right here on the NASDAQ. So for the last 2 years, this is what we've seen. Okay, so it's been very bullish. We were at 1107 in January of 23, and now we're sitting pretty at 18,297. So yes, that would be a very bullish move. Between June of 23 up until October of 23, we experienced some chop during the summer and popped right back up entering the new year, just like we had previously. And as you can see, the previous summer we also experienced a little bit of chop over here before springing up. But let's look at what this candle has to say and what it shows us about the markets. But just keep in mind, we're in a very strong bullish trend. So anybody who's telling you right now to be scared and run, you could have been scared here when this candle looked bearish. And yeah, it gave you a little run, but sprang back up. You could have been scared here, and this gave you nothing really before it ran back up. So you want to really pay attention to what the market's saying. Let's take a look. Let's dive a little bit deeper and see what we can explore. So this is the weekly range. As you can see, it stayed pretty nice and neat between 18,376 going down to 17,837. And if you really want to look at it, it's been dancing here 1, 2, 3, 4, 5 for the last 2 weeks. It's been consolidating right here at the highs. Let's dive in a little bit deeper now and see what happened day by day. Okay, on Monday, as you can see, we had a very narrow range day, sort of consolidated right there at all-time highs, maintained, waiting for economic numbers to come out Tuesday. I forgot exactly what it was, but on Tuesday we received those numbers, weren't great, and we crashed all the way back down to the lows of the previous week. Weren't able to break anywhere below those lows, and ran back up to visit all-time highs again for the remainder of the week until Friday. And Friday's where things got interesting again. Okay, so Thursday, as you can see, we're sitting here right near all-time highs, looking pretty. Friday, all night, markets ran, leading up into the night. Let's look at this 15-minute chart here. And as you can see, market gapped up, ran significantly. And in the morning, we received those economic numbers right here at 8:30. And the numbers were good. They were unemployment numbers. They were high. And the market expected, because unemployment numbers are high, more people are losing their jobs. These people are actually very happy, and they want to run the stocks prices up because these companies are saving more money because people are going to get more desperate and they're going to accept lower pay. Therefore, the companies make more money. Stock market's happy. So, because these economic numbers came out good or in line with companies' expectations of what they would like to see happen, everything ran up pretty significantly from 8:30. As you can see, jumped up. We started off right around 18.5 and managed to reach up to 18,675, all within I would say about an hour and a half, right, from 8:30 all the way to 10. Markets opened at 9:30, went berserk, got us to all-time highs once again before a huge collapse. Now this was, I would say, about a 400-point swing from 18.7 down to 18.3. So we dropped 400 points at the very end of the week. So it landed us all the way back to where we were at the beginning of the week, or sort of towards the end of the close last week. Now we're sitting right below those numbers right now, so it is possible that we could see some continuation to the downside. And this could be what ICT calls a Judas swing, meaning it's just swinging up to reach all-time highs before it can get all the people excited and buying. So big smart money could sell to the people and ride the price all the way back down with momentum, while people keep saying, okay, this is the bottom, this is the bottom, this is the bottom, this is the bottom. It happens. But again, this might not be it. According to the trend, let's remember what I said in the beginning of the video, that we're in a very bullish trend here. So we can't just anticipate and assume that a crash is going to happen. We're going to need some sort of confirmation. And for me, that confirmation would be you need to break below these lows here. So you would need some form of confirmation. And right now you have a few lows that need to be broken before I can confirm. I need to see right here, 17.8. I need to see that go and to sit down here, maybe consolidate a little bit more, bounce back up before it dumps back down and starts visiting the 17s, going under 17. But before we get there, I need to see it at least get back down into the 17.8s and break down before I am bearish. But for now, I'm just watching price action here in this range between 17.8 going up to 18.4. I want to see how price reacts within this range. If it's going to give me any bearish or bullish signs, I might be able to anticipate a nice break here. But if it does break down below this 18.2 area and keeps going, I anticipated visiting the 17.8 areas. So again, keep an eye on 18.2, keep an eye on 17.8, and also keep an eye on a potential bounce back above 18.4, because once we get back above 18.4, unless there's just a pop and drop, there's a chance that we're revisiting these all-time highs and we're heading higher. So look at this week's economic data. We have some interesting stuff coming out. Let's go over here to this week's economic calendar. I'm using investing.com's economic calendar, and as you can see, Monday I expect the same thing that happened last time, which is sort of some chop, because we don't have any major news. We have the New York inflation expectations on Monday, but that isn't huge. But Tuesday is a big day because we have core CPI coming out. And again, consumer price index, it dictates how much consumers are paying for goods and services. So we want to definitely keep an eye on that. If consumers are paying more, then inflation is not under control and the Fed cannot cut rates, and the market's not going to like that and they're going to dip. But if consumers are paying less for goods, then yes, we can expect this rally to continue in the bearish side, in the bullish side, throughout the week. And again, until we come across some more important numbers, we have an auction. 30-year bond auction is going on Wednesday. That should be interesting. But Thursday's the day that I'm locked in, because we have core retail sales, initial job claims, and PPI all coming out at the same time Thursday morning. So Thursday morning could make or break the markets. I'm not really good at predicting what these numbers will be, but I'll tell you right now, whatever they are, it's going to be a banger. All right, so to keep your head on a swivel, be prepared for price to go in either direction. And this is just my analysis for the week. Hopefully it helps. Peace.